overall market conditions, and something that you've been talking about a lot lately on Twitter is the importance of having strong entries and not just buying anywhere. So with the recent pullback that and reversal that we saw with the Nasdaq, was that the opportunity to strike with those strong entries?
Yeah, I like to look at the 50-day moving average which is roughly around where the 10-week is on the weekly chart. So that's a very important level for me, both on the Nasdaq, S&P, just because that's an area of institutional support. So as long as we're holding that level, which we've held since we broke out of that 14.1, 14.2 range a little while ago, as long as we're holding that level, that's an area, if we hold that level, to possibly look to buy for pullback buys. And same thing with the S&P, it's been very strong. So those are very strong levels, as well as the 21-day moving average, because strong stocks, strong ETFs, strong indices tend to hold that level when we're in those good power trends. So those are the two levels when I'm doing taking any sort of pullback buys. Those are the levels that I'm looking to buy at.
Definitely. And Dave, give us your perspective on what we've been seeing in the market action this week, actionable opportunities and breadth. What are you seeing right now?
Well, first off, I really agree with Joe, and we've been making this theme about buying on pullbacks as a safer buy point, and I definitely agree with that. Yesterday's action looked pretty normal after 5 straight up days, and I believe if you look on the weekly chart on Market Smith 2, what I'm seeing is a very good rebound after last week's test. You know, last week was tough because for a little while the Nasdaq had fallen below that 10-week moving average, sort of AKA the 50-day on a daily. And if we had closed below that, you know, the possibility that a bigger pullback would have possibly blossomed. That didn't, and we in fact went to new highs. To me, that kind of reflects still relatively calm attitudes toward interest rates. Let's see what happens in a couple hours, though.
Yeah. So speaking of interest rates, I guess we'll check in here on OTNX, 0TNX. That is, that's how you can pull up a visual representation in MarketSmith. So getting above the 50-day line, but yeah, we'll have to see how that unfolds. And Ed, as we like saying here on IBD Live, it's very important to be focusing on the leading groups. What has been standing out to you this week in terms of the industry groups flexing strength?
Well, sporting goods retailers, obviously, I'm just watching from where we're waving by as those stocks all fly by me. But security software, very strong. A lot of good news from there as well. We had Palo Alto earnings. We had this CrowdStrike joining the NASDAQ 100. We had the White House Summit. And so those are flying, but then a bunch of others are flying too. So it wasn't just those two stocks. So those were a couple of areas, but we saw, industrials come back. We saw, some housing names come back. That was really nice is that a week or so ago, just before the rebound, man, the leadership was getting very narrow again. It just felt like it expanded once again. It's like there's just a little level of we were just getting a little bit troubling, and it's not great. Yeah, this advanced decline line is not great, but just anything to show a little more breadth. The market leadership definitely broadened out again a little bit. So that's encouraging for active investors. A little easier to be a stock picker when there's more than like 10 stocks to pick from. So
good point there. Okay, well, thanks team for all of your insights here. Now let's check in on some stocks on the move here. So enterprise software name Workday, WDAY, gapping up here after its earnings report, up more than 8% in the early going. Joe, is this something that you would be interested in at all?
Yeah, I mean, I don't know about buying here, but I agree with the you asked about strong sectors. One of the strongest sectors is enterprise software, specifically, cloud security names. But overall, the strongest sector that I'm finding are all software related, cloud related names, and that's something that is, I mean, everyone is either beating, raising expectations. Total addressable market's very strong on a lot of these companies, and there's still, believe it or not, that move to the cloud. And I'm still finding it to be the strongest sector out there.
Yeah. And before today, and of course, we don't know how the action is going to unfold here with Workday, exactly how it'll close for the day. Of course, we're only been 5 minutes into the session, but we've seen other enterprise software stocks with these sort of game changing type of earnings reactions. DocuSign, for example, DOCU was really basing out and not looking all too great until early June, a big reaction to its results, and that sparked a new run. And more recently, Paycom Software, PAYC, a gap up within a base after a long consolidation. It is continuing to move higher from that. So could we perhaps see something similar with Workday?
Yeah, no, it's possible. I mean, I also like to follow CRM. They reported earlier this week, Salesforce, I call it sort of the granddaddy of all cloud computing names, broke out of that big base on the weekly chart. It had been consolidating for a while because they make tons of acquisitions, but the acquisition of Slack was the biggest one they made. So it just took a while for that to absorb in the company, but they just keep crushing it. Profit margins keep expanding. ServiceNow, I like to look at a lot of the biggest ones. NOW, that one's also moving out of a big base as well through that 600 level. So that's why and of course, Microsoft, one of the leaders in cloud as well, making a new high last week. So that's a good indication of the sector overall. And then beneath that, there's tons of other large cap and mid cap names that continue to do well.
So those three names that you mentioned, is that, of course, with proper entries, more of where you would want exposure to the software sector, or how do you handle stocks, I guess, in general, when you see a gap up on earnings like this, like with Workday?
I'd prefer to try to get those entry points again closer to moving out of the bases. Or I also want to try there's so many of them that you have to just do your best. It's a common question I get. Okay, there's 10, 20 great software names. How do you narrow it down? You just have to do your best to use as much information to increase your probability. So it's, strong earnings and sales growth. Try to get that, strong relative strength, strong entry point out of a base. So Workday's not one that I'm in, I'd be interested in because it's a great company and a great longer term hold, but it just doesn't have the great relative strength and technicals that some of the others might have. So I'm trying to, I don't mind if it's a large cap name. I prefer some of the mid cap names, but I'm trying to find ones with better entry points. I mean, I've been in Bill for a while. They reported they just destroyed numbers, and yesterday after the close, I was in this one around 190 a couple months ago, coming out in that handle area, coming out of that base in July. So, and then I had the cushion to hold over the earnings. So that's where I'm looking for to get those entry points as they're emerging out of the base.
So speaking of Bill.com, is this a situation where you would be either adding to your existing position or maybe taking some profits? How would you handle that?
Yeah, I like this one longer term. I think this has a huge total addressable market. I wouldn't chase it here. I've already been in it. It's a great question. I will look to add to it, but just not now. A lot of times after they gap up, I just want to give them time. Sometimes they gap up and go sideways, like Team is an example of that as well. TEAM, that one gapped up huge on earnings, and then maybe wait for it to go sideways, 3 weeks tight, something like that. So I'm not